There's one decentralized exchange that blew up into the mainstream, processing over $10 billion in daily trading volume as its token went from $2 to $60 in less than a year. Zero VC and only 10 team members. That's right, today we're talking Hyperliquid, and by the end of this video, you will know exactly how many Hype tokens you need to hold today to potentially retire as a millionaire. But before we get into it, I've noticed most of you who watch my videos aren't subscribed yet, so if that's you, don't hesitate and hit that subscribe button right now, and I'll make it worthwhile for you. Now, let's dive into Hype. This is not a financial advice, always do your own research. Hyperliquid launched in November 2024, but the story begins way earlier. Founded by Jeff Yan, a Harvard grad and former high-frequency trader at Hudson River Trading, Hyperliquid emerged from his market-making firm, Chameleon Trading. After witnessing the FTX collapse in late 2022, Yan and his tight-knit team of fewer than 10 people decided DeFi needed something better. A perpetual futures exchange that could match centralized platforms in speed while staying fully decentralized. And when launch day arrived on November 29, 2024, they held one of the biggest airdrops in crypto history, if not the single biggest. 310 million Hype tokens, 31% of total supply, distributed to 94,000 users. Not the usual 500,000 wallet addresses most projects aim for, Hyperliquid chose quality over quantity. The average recipient got around 2,900 tokens, worth roughly between $28,000 to $45,000, depending on when they checked. One lucky wallet claimed 970,000 tokens, which was nearly $10 million at peak prices. But here's what made it legendary. The token didn't dump. It went from $2 at Genesis to nearly $16 within 2 weeks. Most airdrops crater immediately as farmers sell. Hype defied gravity because there were no VCs waiting to dump on retail. The community actually wanted to hold. Here's where Hyperliquid stands out technically, though. Instead of building on Ethereum or another existing chain, they created their own Layer 1 blockchain called HyperCore. This custom blockchain uses HyperBFT consensus optimized for ultra-low latency trading. And the result? Block times of under 0.2 seconds and throughput of 200,000 orders per second. Believe it or not, that's faster than most centralized exchanges. Now, let's break down the tokenomics, or simply put, where all these tokens are going, because this is crucial for understanding Hype's investment thesis. Hyperliquid's 1 billion total supply breaks down certainly and cleanly like this. As mentioned, around 31%, that's 310 million tokens, went straight to the community via the Genesis airdrop back in November 2024, putting real skin in the game from day one. Another almost 39% is set aside for future emissions and community rewards to keep incentives flowing as the ecosystem grows. The core contributors and team hold 23.8%, which just started vesting linearly over 24 months from late November on. Then you've got 6% for the Hyper Foundation budget, a tiny 0.3% for community grants, and just 0.012% locked in the HIP2 liquidity protocol, keeping things lean and user-focused overall. Here's what makes this absolutely wild though. No venture capital allocation. Zero. Nada. That's virtually unheard of in crypto. Most projects give 20 to 40% to VCs who dump on retail. Hyperliquid said, no thanks, we'll bootstrap this ourselves. The team's 238 million tokens started unlocking on November 29, 2025, after a 1-year cliff. They're now vesting linearly over 24 months, releasing 0.02% daily, or around $6 million at the current price. Now, before you panic about dilution, here's the counterbalance. Hyperliquid's buyback mechanism. The protocol takes 97% of all trading fees and uses them to buy back Hype tokens from the market. At current fee generation of $60 to $90 million monthly, buybacks can absorb most of the daily unlocks. The remaining supply pressure needs to be absorbed by organic demand. Key point here, no inflation, no emissions. The only new tokens entering circulation are from scheduled unlocks. Once vesting completes in 2027-28, there'll be zero ongoing dilution. In terms of network performance, Hyperliquid isn't just fast. It's pushing the limit of what an on-chain exchange can do. We're talking about infrastructure that can process around 200,000 orders per second, compared with Ethereum's roughly 15 transactions per second, while still giving traders sub-second finality with a median confirmation time of about 0.2 seconds. On the native DEX, users don't even pay gas fees for trades, and they can access more than 100 perpetual markets with leverage of up to 40x, which makes it feel closer to a top-tier centralized exchange rather than a typical DeFi app, if you ask me. In February 2025, Hyperliquid unlocked the next phase of its roadmap by launching HyperEVM, an EVM-compatible environment that lets developers deploy Solidity-based dApps directly on the chain. That single move turned Hyperliquid from just a DEX into something closer to a full financial operating system where derivatives, agents, and structured products can all live on the same high-performance backbone. The adoption numbers back this up in a big way. Over a recent 12-month window, Hyperliquid processed around $2 trillion in cumulative trading volume and captured more than 10% of global perpetual futures activity, while at peak controlling roughly 70% of the decentralized perp exchange market. The HyperEVM ecosystem has grown to well over 800 projects, and builder codes have already routed more than $100 billion in volume through roughly 170 integrations, which actually shows how much external order flow is plugging into the protocol. See, recent upgrades like HIP3 have taken this even further by making perpetual markets permissionless. Anyone willing to lock up 500,000 HYPE can spin up their own custom markets and plug into Hyperliquid's vast liquidity. Early HIP3 deployments have already seen individual markets clearing tens of millions of dollars in daily volume, proving there's real demand for builder-deployed perps. On top of crypto pairs, the ecosystem now offers synthetic exposure to tokenized stocks, forex, and even pre-IPO style markets, pulling chunks of traditional finance directly onto Hyperliquid's rails. Let's not waste time and address the elephant in the room: centralization concerns. Hyperliquid currently operates with approximately 25 validators, all running the HyperBFT consensus. Critics argue this is too centralized compared to Ethereum's over 1 million validators. The team acknowledges this and has a clear decentralization roadmap. Hype holders can stake tokens and participate in network governance. The testnet showed 39 validators maintaining sub 200 millisecond block times, proving the network can scale decentralization without actually sacrificing performance. Here are some other major risk factors that you need to be considerate of. First, the token unlocks. These unlocks could cause $300 to $500 million monthly selling pressure through 2027. If demand doesn't keep pace, price could suffer. Next up, the whale concentration. Some early users received 5,000 to 10,000 tokens in the airdrop, worth over $140,000 at peak. Recent data shows whales accumulating at the $30 to $33 support levels, but large holders still dominate. The third point I want to make here is on regulatory risk. Operating a perpetual futures platform puts Hyperliquid in regulatory crosshairs. No major issues yet, but this could change. Fourth on the risk factor list: competition. DYDX, GMX, Jupiter, and newcomer Aster are all fighting for market share. Hyperliquid dominates now with more than 75% market share, but you know complacency kills projects. Next thing you need to be wary of is the smart contract risk. Despite no major hacks to date, the platform is relatively new. In late 2024, concerns about North Korean hackers caused $256 million in withdrawals in just 30 hours, though no breach actually occurred. Case in point of how FUD works. And lastly, Hype hasn't been truly tested in a tough battle yet. In terms of resilience, unlike Ethereum or Bitcoin, Hyperliquid hasn't faced a major black swan event or extreme market stress test. Now let's look at the price history of Hype and what the Millionaire math looks like here. Since the launch, the price did over 15x in the first 4 weeks. Then it saw a correction of around 70% and scored another move of 500%, reaching an all-time high of $59. Since then, the price has been in a correction and it is currently at a 53% discount, $27 per token. The market cap is roughly $7.3 billion right now. Okay, let's see the 3 scenarios in which owning Hype could make you a millionaire. In the bear case, or the least optimistic, Hyperliquid survives, keeps a solid chunk of perpetuals volume, but never fully hits its peak performance. Let's say it reaches $75 per token. That would be nearly a 3x on your money today. And to hit $1 million, you would need about 13,500 Hype tokens. At the price of $27 today, that stack would cost you roughly $360,000. In the base case scenario, the second one, more optimistic but still attainable, Hype hits $150. For that to happen, Hyperliquid should do what it's already doing. Consistently pull more traders, builders, and yield into its ecosystem. At that projected price of $150, the return on your investment would be about 5.5x. You would need up to 6,700 tokens, and those would propel your portfolio to $1 million. Today, that would require $180,000 of investment capital. And here's my cherry on top, my favorite bull case scenario, where Hyperliquid not only wins the perp DEX war, but becomes the default on-chain venue for leveraged trading across crypto, stocks, FX, and synthetic markets. My projected future price is $300 per Hype, and that will make you 11x gain. It's simple. Get roughly 3,300 tokens today, worth $90,000, and watch this portfolio grow to the treasured $1 million over the next few years. Now, in all fairness, for Hype to hit even $200, that means sustained growth in trading volume, successful HyperEVM adoption, and navigating the token unlock pressure. Is it possible? Absolutely. Is it guaranteed? Not in any way. This is a DEX we're talking about today, but in case you're wondering which easy-to-use centralized exchange to trade the Hype token on, CoinEx is my #1 pick. And only now, they're offering a $25 gift for new users who register from the link in the description of this video. CoinEx is a proper crypto exchange with almost 10 years of experience, where you can buy Hype or any of the other 1,000 tokens on spot. See, if you enjoy a bit of a risk and potential for high earnings, you can also try their leverage trading options. The platform is very easy to use, so go register to CoinEx from the link in the description, get trading, and get that $25 for free now. Guys, I want to take a look at the institutional traction now, which is already forming and could be the most significant catalyst for Hyperliquid. In Europe, 21 Shares runs a Hyperliquid ETP, and both 21 Shares and Bitwise have US ETF filings in the pipeline. Custody sits with Coinbase and BitGo tier providers, giving institutions the compliance setup they need. Hyperliquid's USDH stack uses Stripe Bridge and BlackRock managed treasuries, while Anchorage Digital now offers Hype custody and staking on Hypercore. Hyperliquid Strategies is seeking to raise up to $1 billion to accumulate Hype, and the core protocol has already spent about $700 million on buybacks this year. So you've got ETFs, custodians, buybacks, and treasury vehicles lining up to make the project institution ready, and that gives me confidence in it. So that's the full picture: the tech, the tokenomics, the risks, and exactly what it takes to hit 7 figures with Hype. If you got value from this breakdown, hit the like button, drop a comment with your price target, and make sure you're subscribed so you don't miss the next deep dive. See you in the next one, guys. Ciao.